Ben ritrovati martedì mattina su floor del New York Stock Exchange, un tentativo di recupero quest'oggi dopo la peggiore seduta dal mese di novembre. Ne parliamo con il mio ospite qui su floor, come vedete Otto, che è Designated Market Maker per Night Capital Americas. Mark, thank you so much for being with us again.
Thanks for having me back.
So Mark, first question, I cannot avoid it, what is going on? The reaction of the market yesterday was clear. A lot of fear about Europe. Italy, for now, is not governable.
Definitely, it's reflecting the fact that the market doesn't like uncertainties, and this protest vote that occurred in Italy really rattled the market. I mean, yesterday we saw the volatility index spiked, and it was up 34% yesterday. So that's one barometer that you could definitely look at that's reflecting on what traders are viewing. So I don't think that, with the rally that we've seen since November, really, that anyone's factored in more problems with Europe. So this was definitely a shock and a surprise, and that's what we're seeing.
Even though a lot of people are saying that even though last year Europe was a big factor, everybody was very fearful. And of course, in Europe things were not great. Still recession, but last year fear was really high. The US stock market managed to just end the year with a gain. So a lot of people are kind of playing down Europe, and maybe the reaction today could just, confirm that?
Well, something to consider the fact that, right now we're up 75 points, but we were up about 125 points earlier. So obviously the housing data this morning came out and it was excellent. So was consumer confidence. Another thing that occurred this morning that helped with the rally is the fact that Ben Bernanke speaking today and tomorrow. A lot of people thought that he may temper the market and get them ready for a pullback with the stimulus plan. So
and he's doing the opposite. He's actually confirming that he's completely ahead the QE3.
Yeah, it seems as though we're moving forward with the recovery at a moderate to uneven pace. He's indicated though that we should be cautious simply because of the fact that the labor market is improving, however it remains weak. He is defending the stimulus package by saying that interest rates being low have helped with the housing recovery, and today's numbers really support that as well. However, you can't take out Europe out of the equation, particularly what's going on with Italy. The contagion effect can absolutely occur again. The sovereign debt yields are definitely a concern that people are going to be looking at going forward. And the fact of the matter is, like I said, we were up 125 points. We're up 75 points right now. I was watching the European markets. The FTSE, CAC, and DAC were down about 1 to 1.5%. However, if you look at the Italian equities market, it was down 3.5%. It's closing in on down 4% right now. So what I'm going to be keying in on is 11:30 for the European markets to close and see if we sustain these gains here in the United States going forward for the rest of the day.
A step back. Let's go back to Italy in detail. How do you read these election results? I mean, we were talking before we started the interview, and definitely it's a proof that Italians were not happy, of course, and they cast a lot of protest votes. But how that really can help the country right now?
Well, I think what people are looking for is change. There's a lot of anger and frustration out there, and it's reflected in this protest vote. I think that people are not happy with the government. I've read complaints about there's corruption in the government's stealing. A lot of the other candidates have made gains in the fact that promises being made, promises of reform, perhaps having the younger generation be more involved in the government. So the younger generation in Italy is having a hard time finding jobs. So I could absolutely see how these gains were made off that.
But the point that we can make from here, on a market perspective, is that maybe it's not a time to protest, it's the time to fix whatever is wrong in the country and try. Maybe a lot of people, even here, they were pro-austerity measures, and now they're worried that those austerity measures will just be the one that we've been so far last year. They've been useless, and so we have to start all over again.
Absolutely. I think, and again, that adds to the contagion effect, which could spread this, well beyond Italy's borders. When you think about it, the Eurozone crisis started with little Greece. So, you're talking about the third largest economy in the Eurozone. So, all eyes are going to be on that developing situation for sure. However, sometimes when people want change, pain comes along with it. It is part of the process. So perhaps, in some cases, pain is better than doing nothing. So that's an observation, that I've made.
So we'll see in the next few days how things will develop over there. Now let's come back here in the United States. Sequester in few days. The market in the last few days have signaled that they really believe that Washington will just, find a compromise again, maybe at the 11 hour, like it has happened recently. What do you think?
That's absolutely, from all the reports I'm reading and the data that I'm looking at, that seems to be what people are looking at. In the 11th hour, they're going to come to some sort of a conclusion and an agreement. One barometer that you can look at is, defense is definitely one sector of the market that's probably has the most to lose if the sequestration actually occurs. The DFI index is actually up near all-time highs right now. So if they really thought that they were in jeopardy, the defense index would definitely be getting pummeled right now, wouldn't you think? Instead, defense-related stocks are actually climbing as well. So that sort of indicates the fact that they do believe that an agreement will be made.
So now Bernanke is still speaking, as we know, today at the Senate, tomorrow at the House. There will be a Q&A session soon. Do you think that whatever he said this morning is enough to at least counterbalance all the signals that came last week from the minutes?
Yeah, it seems as though, he's saying what traders want to hear. They didn't want to hear a tempering of a situation where, if the market improves, that they're going to taper off on what they're doing with the stimulus. So what he said this morning is what traders want to hear, sort of reinforces that they're plugging along. Things are improving. They are cautious. He did mention the sequestration could certainly be a headwind going forward. Obviously, if Europe starts to blow up, then that's another concern as well. However, he didn't make any indications on any sort of a pullback on the stimulus. So unless they're saving something for tomorrow, we'll have to see. The rest of the week, we do have a fair amount of macroeconomic data. But however, I think that, obviously Bernanke and the sequestration going into the end of the week is probably what people are going to be watching more closely. We do have durable goods. We do have personal income, personal spending, GDP coming up, Michigan confidence numbers at the end of the week. So there's plenty of macroeconomic data out there for us to keep an eye on. However, those 2 points are probably going to be it going forward for the rest of the week.
Absolutely. So give me some numbers. All said that, after what happened yesterday, what has changed with the numbers with the S&P 500?
Okay. Well, technical analysts have been calling for a market pullback for quite some time now, probably a couple of weeks now. So right now, 1495 for the S&P 500 is resistance going up, and then 1505 and then 1511. On the downside, 1465 and then 1451 are support levels that I'd be looking at.
Okay, so Europe, sequestration, and S&P 500. Busy week ahead. Thank you very much, Mark, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.